Okay, sorry. I'm gonna start recording and screen share too. So, just for the sake of the recording, we've been talking for 2 minutes maybe about slabs, student loan asset-backed securities, and trying to figure out if that's a thing. So, we might need to figure out where that comes from. So, Sam, you said you looked up somewhere. Yeah. 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 So then, I want to see if I can find like one that we can look at, right? Can I just get an example of one? They'd all be private loans. Maybe they're it's all peer to peer, I guess. Okay. The thing with a Bloomberg terminal is peer to peer trading is what Bloomberg does. So we could find it even if it wasn't publicly traded, but we'll have to do some digging. So within okay, there we go. So Sally Mae does them. Private Loan Education Trust, 2022 January. Okay, so you need the student loan private education trust. So they have 360 million in this fund. Oh, that was in 2014. 115 million recently. So we want, let's find it on here and go Sally Mae. Spell May. Yeah, it's just the private education loan trust. SMB private education. Oh yeah, that's good. Loan trust. Let's just see what comes up. Loan monitor. You can probably find that. So this would be like a search function within loans. I don't know. I wasn't prepared for this. Yeah, no, that'd be pretty cool though. I don't know that that's something that we would be able to do in the SMIF though, because yeah. So let's say if it was like regular CDOs. I mean, let's just look at the regular CDO market. Let's see, security finder within CDOs. Okay, so mortgages. Let me see if there's a better one. Might be under funds, but I'm going to go with mortgages first. And then if we wanted to like purchase mortgages or something, like what's the minimum? I mean, this is a $210 million mortgage, right? So like, could we afford it? No. So some A10 securitization is the company that created this. And then the current balance is 10 million. And then you can see it's producing 1% returns. And then, you can go look at all this data if you want to, but like we couldn't afford to do anything, that'd be cool if we were a multi-million-dollar fund. We just buy a student loan backed security of all Chico State student loans, and then just like own all the student loans. That'd be pretty neat. I don't think they do them that way. We're just like financing the university. No, that wouldn't really work. Okay, so in terms of the SMIF overall though, I want to like make sure we have a plan for the next year and everything, and like what we're gonna do and stuff. So make sure this is okay. So over the summer, the foundation, the university foundation, which is like the people who manage the investments for the campus, have a meeting to vote on our rules, like for what we can do. And the expectation is they're just going to approve it because it's not really any issue. Like nothing that we're doing is particularly weird. So if they approve that, then we'll have the actual account set up and ready to go for the start of fall. For those of you who are going to be here in the fall, we're going to hopefully have something to invest in, right? We need some sort of like, what are we going to do once we start? We don't need to like day one, don't need to start buying things, but we want to like kind of hit the ground running a little bit in the fall semester. So we'll probably do some some research, and during the course of the semester, at some point, we want to establish a portfolio. So in October, they want us to present a report to them, although it'll be the very first time. We'll have just launched in August, so probably don't have much to report. But going forward, every October, they're going to want an annual report, and that's when they have their annual meetings in October. So that's the plan. I think it'll probably get some context for me. At some point, I'll message people over the summer about like, hey, here's what's going on, here's updates, so you're all is everybody still going to be like able to use the Discord thing over the summer? I don't see why you wouldn't. But just, yeah, if you have it on your phone or something, you'll be able to send messages for me. You don't have to do any work over the summer, and unless you wanted to run like ideas by me, I don't mind that at all. I'll be working with it. That's kind of the plan. So then when we start in the fall, I'm going to send out a lot of announcements to all of campus. I'm going to try to bring in students that aren't always just finance majors. So we'll have a bunch of people coming in, hopefully. From what I've heard, it seems like there's a lot of people in other majors who'd be interested in managing a real investment account. It's kind of cool, right? You get to manage someone else's money as a college student. Really. So I'm hoping we'll get people from engineering and ag and CME, which is the communications group. I would kind of want CME to be involved because we want to do kind of an investor relations kind of thing with our program to be able to like tell our story. So that's the econ students do. Probably that's the idea, and bring them in. But I want you all to be like the ones who are here to be leadership. That since you've already been involved. So anyone who's still here in the fall and wants to do that, that's my idea. Okay, so I don't have a stock pitch today, and it doesn't sound like anybody else does. But let's end our semester nicely. What do y'all want to do? What do you want to look at? Yeah, a little. I mean, we can do something next week. A little late. What do you want? You want to meet sometime next week? It's finals week. I can order pizza, a couple pizzas. Not on Friday of finals week now. Is everybody available? Wednesday of finals week? Yeah. Noon? Pizza party. It's got to be at like lunchtime. You want an 8 a.m. pizza party? Yeah, okay. Let's meet at the Bear at noon on Wednesday. Yeah. All right. Yeah. Okay. I'll put that on there. Okay. Noon on Wednesday. We'll meet at the Bear. I'll put on there like an hour and a half. Be safe for my schedule. So 12 to 1:30, we'll be at the Bear. I'll be there at least. And then I'll order some food and stuff. I can't buy you all drinks, but I'll order like wings and fries and all that stuff. That'll be our end of the year celebration. Cool. Okay. So then, as far as today, anything interesting anybody want us to look at? I mean, do you want to see what was going on in the markets? So there's been a bunch of ridiculous things. Look at our portfolio. So we're still in it? Okay, and when I messaged everybody, what did I say we bought it at? Yeah. I can so next semester what I'll do is anytime we buy a stock, I'll add it to the ticker in here too, so it comes up when all the stocks come along. Hold on a sec here. Okay, so I put on here, so after that meeting we did 5% in Micron, 95% in the SPY. So we had 17 shares of Micron at 72.14 on that day when we talked about it. That was April 8th. Yeah, so we bought it at 72.14, so we're down about 7 cents a share on 17 shares. So a couple bucks, not even, less than $1. Could have been. So what's what was the other side that I said SPY. Later we talked about IVV. But SP 53 shares of SPY at 447. So let's go SPY equity or no index, and then just GP. Oh no, SPY US. I think they got to do equity then because it's a ETF. Yeah, so that's at 400, and we bought it at 447. So that's down pretty rough. At the same time, so looking at Micron, so Microns Performance compared to, let's see if we can include like a tech index. So like which one? Yeah, like tech stock. Oh, that's their index? Perfect, excellent. Let's do that then. So let's I can click add stocks US equity, or that'd be an index. I'll get rid of equity and see what happens. So XX, iShares Semiconductor ETF. Is that a good representation? Okay. So then at what point we bought it in like April or something? Oh yeah. Let's do this. So the index, yeah. The index can be what? Bright pink. Excellent. All right. And then the mountain is Micron. So we bought it like April 8th is when we mentioned it. So we are technically outperforming the index. So let me do this too. Oh, there we go. So percentage change from Micron then to now is 0.2% down versus the index at the same time is 4.3% down. So yeah, awesome. We're outperforming the index by losing only about 1/5%. Yeah, bless you. Well, the index is down 4%. So we outperformed. That's the SOX index though. That's the equity or that's the tech index. That's semiconductor. Yeah, semiconductor index. So I mean, our overall comparison really is supposed to be to the S&P 500. And if I add that on there, so we wanted to, well, let's just do the index itself. So S&P 500 index. And I'll make that a different color too. Let's make that like bright green. That's kind of a green. There you go. Is that visible at all? Yeah, so that's down even a bunch. So we're outperforming that too. So what we should have done is put all of our money into Micron. Yeah. There you go. So the index is down 8.5% since we bought Micron. So if our portfolio was doing Micron, was like in Micron, so if I go back to our portfolio, I say, here's our portfolio. We have the S&P 500 trust. We have $2.47. We have, oh, that's a percentage, $550. And we have Dow, Micron, ASML. And that's the last time I updated it. I didn't add CrowdStrike because I said we shouldn't get it. I didn't add Costco, and I didn't add Microsoft. Those were the other three that we talked about. Because this isn't really like, this isn't our real portfolio. I was just putting it in there for tracking purposes. But we can see, so since we got it, these are all green numbers, but that seems like today. They're up to date. I want like total return. Those are green too. I don't think that's right. Yeah, that's all right. That's not right at all. Why is this, I'll say $200 gain on that? That can't be. Yeah. Yeah, right. I'll check this real quick. So market value, position, figure. So let's go tracking, oh, performance. That's what we want. We want to be on performance. Okay, come on. There we go. That's what we're looking for. So total return month to date, total return year to date. So 13% loss overall in our entire portfolio. But we have the S&P 500 on here, which is at a 12% loss. Oh man, so we're not quite beating it. So ASML, no, yeah, ASML is down 18. That's hurting us a little bit. Micron is down 9 from when I put it on here. Dow is up 5%. That's kind of nice. Good. Dow, we talked about last semester. It's Dow Chemical, and they had like they made a bunch of like all kinds of plastics and weird things. So that we talked about last semester, like I don't know, November or October maybe last semester. So there's that. That looks pretty good. We should have bought Dow. Should have put everything in Dow. That was my pitch. It's gonna say that right now. No, but I think I can't remember what I said. I think I said we buy it at 65, so it's not really that much. No, I couldn't have said that, right? Maybe I said buy it at 60. That might have been. Either way, doesn't matter. So that's kind of supporting it. So I mean, this isn't. Over the summer, I have like a long checklist of things I need to learn more about in Bloomberg so that I can better control the portfolio thing on here. Because when I go to edit our portfolio, I can only add and subtract positions based on the price at that time that I'm editing the portfolio. I can't go in here and say, okay, we bought it 3 weeks ago and here was the price. So that makes this kind of not useful, you know? No, so that's on my checklist too. Yeah. And so I would love to be able to say, because in here I can see like within my firm, or how do I do that? Firm setup. So if we can add, I don't know if like we're able to do this or not, but if I can add like all of us to a company so that in Bloomberg we're all part of the same company, and then I can share within the company, and that way like I can just run everything through Bloomberg. That would probably be the best. So we'll set this up better. And what I'll do, I mean, when we have a real portfolio, we're going to be using a business in town called Asset Management Group, and they have their own login, like they have their own client portal. So I'll be able to show you like the actual, here's what we actually own the day we bought it, sold it. I'll get statements for our account, and it won't be in Bloomberg. We can, also track it in Bloomberg simultaneously just to say like, hey, we all have access to this. But yeah. I think what we will do, once I can edit Bloomberg's portfolio stuff better, we can get a lot of measurements and reports, and we can build our annual report as our performance using Bloomberg stuff. So it'll automatically calculate our value at risk and under different scenarios and our tracking error. And that's the kind of stuff we need to report to the university. So we'll be able to do that kind of stuff too. Any questions about that? I don't know. I think we might be aiming at a recession. Yeah. So we might actually, it might be kind of a blessing that we're not buying anything right now, and dealing with that over the summer. Wait, what's that? So just barely missed 20% overall loss on the market. So we're not technically in a bear market yet. And then we had 1 quarter of GDP decline. If the next GDP number that comes out as decline will be officially a recession. And then the last CPI number was 8.3, inflation at 8.3%. The one before that was 8.5. So it's coming just barely off the peak of inflation. Sure. We kind of are. So if we had, so we technically are within a stagflation period right now because we had GDP decline and we have inflation at 8.5% at that same time as that GDP decline. So that is high inflation with GDP flat or down would be stagflation definition. So we are in stagflation right now, which we had in the 70s, and that just a mess. And so the hardest thing to get out of is stagflation, in the sense that to increase GDP, you kind of have to get the economy going, right? You need to like pump up the economy. And how do you do that? Well, the Federal Reserve's only way to do that is to give everybody money. And if inflation is really high and you give everybody money, inflation is still really high. And so there's not really a good fix for that. I mean, it actually makes it worse. So they almost have to like I almost think of like a medical scenario where somebody's dying and they like punch them in the chest, and it's like that's all like, it's like that's probably not comfortable, but you got to do something to like not die, right? So yeah, that's what I think of. Yeah, well, the run up to the midterms is going to make politicians want to pass all kinds of different rules and policies and stuff. So how those affect the economy is going to be a big question. Yeah. So so let me see if I can. When's the next? What's today? The 13th. Okay, the next GD. So I want to find central banks. That's not really helpful. Oh, because the dates are limited. I don't remember. I don't remember when the next. It's like a quarterly GDP number. I don't remember when the deadline is for it though. So June 15th is the next interest rate decision, and they said they're probably going to raise them. And then on May 25th will be the next meeting minute release. FOMC, Federal Open Market Committee. When is GDP next? GDP release. Real GDP. So this would be Q2 April. No, they already did that, didn't they? Training teachers estate planning. Yeah. 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 He used to be mayor. Yeah, I know. Yeah. I think he's running for. He's not running for mayor though. He's running for something else. County assessor. Yeah. That makes sense. Real estate. Okay, so I can let me go back one on here. Functions for GDP. May 27th? May 26th. Okay. What are the things you guys want to look at on here? Or it doesn't have to be on Bloomberg. It can be on anything. But what else? What things you guys want to talk about with? Yeah. Lululemon or Lulu's? Yeah. Up a little over 5% today, more than 5.5%. What happened with Lulu? Oh. That's not Lulu specific. Oh, they're growing. Yeah. We need to compare it to a competitor. All equity, not much debt.
I think they've recently taken on.
Kind of tight. That's their index. He's not been doing good. This is for Lulu, so these are analyst ratings. Bernstein says they don't like them. Everyone else says they do. So far, oh, these are the advisors, the analysts. The analysts' return so far this year: 22% loss, 3% loss. That's pretty good. 15% loss, 20% loss. So that's who we're taking recommendations from. So let's go. If we did, you graphed Lulu and then added Nike. We'll put Nike in green. Oops, forgot to save it. There we go. This is just over like the last year or so. Yeah, over the last 1 year. So kind of similar return, although they didn't perform the same in the meantime, but they're pretty close to the same. Past few years. Let's go year to date. Yeah. So it looked like Lulu did better in the most recent, but Nike started off higher, I guess. So even though Nike's been, I guess, I mean, if you look at how this has gone, Lulu started below and ended up above, right? So they've done better technically, right? Nike started off higher and then came down a bunch to kind of meet there. Total return. I wonder how that. There we go. This is in terms of return. So as wherever you graph it from, they both start at the same point, and then how they return. So let's do over the last 1 year on cumulative total return. Lululemon outperforms Nike. So essentially, just under 1% gain on Lululemon over the past 1 year versus Nike's down 15% over the past year. Why is that? You said you were looking at them. Why are you looking at them?
Well, I kind of noticed I was looking at them before that earning where it like shot up. So, like especially in Southern California, I feel like this was up here, and they also growing fast a lot.
Yeah.
So like this was actually pretty interesting, and then they had to earn a shot.
Gotcha. I'll just add some of their other ones on here too. So Under Armour, I will make like, one of them is pink, so I'll do the rest of it's blue. What other colors are there? Yellow, yellow. There we go. That might not be super visible. So the mountain is Lulu, green is Nike, the yellow is Under Armour, and the pink is Adidas. So actually, Lulu's outperforming the other three over the last. This is 1 year over the last 1 year. So year to date,
yeah,
Lulu's still doing better.
It's like more expensive, so we could go in a recession.
Yeah. Great point. What I mean, like I remember like Forever 21 being like the thing, and it was like cheap everything, and like people who don't have a lot of money end up buying somewhat professional clothes at Forever 21, but it's not athletic. I mean, Forever has some athletic stuff. They might outperform more of the like the Nike and the Adidas stuff might be more expensive. Yeah. Yeah. Surprised. So their forecast was good. They said, "Here's our earnings are pretty decent, and we're forecast the rest of the year is going to be pretty good." And their most recent earnings. Huh. Yeah.
It's actually beat estimates by 3%, but it like shot up.
So their guidance for next quarter is yeah, significantly down from, oh, that's year to date though, right? I'm gonna open so earnings trends. I'll open that more broadly. So that's for the full year. So this is for the full year. Their actual 2022 so far has been 7%. This is earnings per share. Yeah, earnings per share. And then their guidance, I assume this is guidance. Oh, that's the average expectation. I'll have to figure out where the guidance number comes from. So yellow is actually happened and gray is expectations. So each quarter and then for the full year. So if they think next quarter is going to be similar, just slightly down from the third quarter. Yeah. So they say end of 2020. So quarter four. So for them, quarter four is January. So they've finished quarter four 2022 already. So then quarter one of 2023 is actually April of 2022. Yeah, what they expect the PE ratio to be based on. So what would their PE ratio be if they met their expected earnings per share on the next one and using today's price, which is not super helpful because their price will be different. But if they're, let's say that they said, we think next year, so this is what Lulu actually said, we think the quarter for April of 2022 will give us a 1.43 earnings per share for that quarter. Actually, that's not helpful because we don't use quarterly. So for the full year of 2023, the year that ends 2023, we expect 9.43 earnings per share, $9.43 earnings per share. Given that our current, what's our current, hold on, it's got to like work on me here. There we go. Given that our current price is $3.10, if we had a 9.43 earnings per share on a 310 price, it's about a 3% PE ratio, forward PE or something. Did I miss a decimal? $9.43 on a price of $3.10, right? Yeah, the price is $3.10. So why is this 33 instead of just 3? I don't know. But they're, yeah, but I mean, 7. I don't know why PE is price to earning. Oh, I did it inverse. That's why price to earnings 310 over 9.43, right? Is 9.43 is their expected. So 32.87 should be their forward. There you go, 32.95 versus what I just did. I dropped the decimal, so 32.95. I said 32.87. So that's where that number comes from. Is that what you were saying? For where did you see forward PE? Oh, gotcha. Yeah. Yeah. So then they're for 23, 24, 25, looking at this dropping, declining PE ratio means either their price is going up or their earnings are declining. Or actually the other way around. Sorry, yeah. Right. Reverse what I just said. Price is going down or their earnings are increasing. We can see 9, 11, 12, so their earnings are increasing. Because all of these expected in the future are based on the current price. All of these other ones the same way. Price to sales, price to book, price to cash flows. Same idea. So maybe their cash flows are increasing with their expected cash flows to be what's their expected book value to be, and what's their expected sales to be. And we can do the same thing. We might want to compare, if we were going to look at Lulu as being a possible investment, we want to compare what their multiples are for all of these other ones, compared to their competitors. I'll come up with an idea for the fall semester. I'll have like an outline of like, here's how we're going to generate these reports. And so I'll have almost like I'm going to kind of treat it a little bit like a class. So I'll give you like assignments and say like, figure out this data about your specific stock. And that way you'll have some guidance rather than just making it up as we go. And then we'll compare competitors. Yeah. Yeah, I mean, oil. Can I add USO? And then do it based on total return. So this is compared to oil over the last year. Chevron and oil tracked very similarly. So I added USO, which is just an index fund for oil. There you go. So oil has gone up quite a bit, 85% return, and Chevron's up 65% return. Here's the thing: in the student managed investment fund, we're not allowed to buy Chevron. Yeah, because it's an oil producing company. We can buy. What's that? They're not an ethical company, even though they used to be a major recruiter of Chico State students. Like a lot of business students go over to Chevron in finance and accounting and all kinds of topics. Yeah, there's a big blow about that when it was like a student. It wasn't business students, but it was like a student referendum vote to say that the university shouldn't be buying oil companies in their portfolio, and it passed. And then so the university said, okay, I guess we won't do that. And then Chevron like dropped all their sponsorships. And, yeah, and the AS, the Associated Students. Yep. That's great. We can't invest in any companies that are on the top 250. Like, it's not all oil. It's like. No, I never actually finished looking for it. So I'll find it though at some point. I probably won't be able to find it now since I couldn't find it last time either. But it's the what is it called? Whatever 350, 350.org, something like that. Yeah, they wanted me to buy their list. That's right. I remember making that joke. Like, oh, let's just start making lists. Yeah. Yeah, so we can't invest in any of the companies that are on that list. But since the university's held to that same rule, I can probably just ask them to list. Make them pay for it. Yeah. I mean, they must because they're held to it too. Arnrich Messina is the investment manager for Chico State Endowment, and they're a donor to our program. So I could call them and just say like, hey, like, what are you guys doing? We want to match what you're doing. That kind of thing. Yeah. Yeah, so no Chevron, no. So does anybody know the largest company in the world as of today in terms of market cap? No, it's an oil company now. Yeah. Oh, I don't know. Is this it? Yeah. That'd be a good buy right now. Well, I don't know. So 1.2 trillion in revenue. What's their? I just want to see what their market cap is. I'm not seeing a cap. 1 year. No, that's their change. I don't see market cap. It's like the least useful metric for anybody. Like, what are they currently worth? Market cap. There we go. 9,000 billion. So 9.8 trillion is their market cap. And all companies by market cap. That didn't really work. Yeah, I mean so part of the way the world's going is trying to be more like electric car focused. And so on one hand, like in the United States at least, having higher gas prices might entice people to be more buying more electric cars. But in terms of all car sales in the country, electric cars aren't like a giant piece of that, right? People still by far buy more gas powered cars than electric. But with the prices of gas, maybe that will change. But because it's not right now, politicians are trying to figure out ways to keep the gas prices low. So there was some bill that was just proposed to like cap the amount of money that companies can make on. Sorry, I just got messed up. That companies can cap the amount of money that companies are allowed to make on their gas. If we look at crude oil prices, which would be like WTI or CL. Let's do CL1, and then do commodity. Where's F9 commodity? And then so look at if I'll just graph it, GP to graph it. Say here's crude oil prices. So CL1 is crude light, and then it's just a commodity. So combined meaning West Texas or Brent, doesn't really matter which kind of crude. And then if we want to overlay on there, like gas price index. That's European. I want US average gas price. There we go. Overlay gas prices on oil prices. So crude oil gets refined into gasoline. And then we can see, okay, so crude oil prices went up. Let me change the colors on that for you. So this, what's that? Yeah, so crude per barrel is the big mountain one. And then the green one is the index for gas prices in the United States. So we might want to say, can we do this on this? No, okay. No, they don't let you do for an index like this. It's not total return because it's not really, you can't really buy it. But you can see, you know, oil per barrel climbed while gas prices climbed a little bit, and then oil per barrel climbed a lot while gas prices shot up a ton right here. So in March, gas prices shot up a bunch, even though oil prices had already been increasing. So we could do some data analysis and see like trends, like, you know, what's the actual regression line here. Could we, you know, we might be able to do this. Let me try this. Let me add a new thing and go beta. And beta does a regression. It's designed to do a regression against the S&P, but let's change it and do not against the S&P. So I'll do, this is crude oil prices is my dependent variable, which means it's my up and down returns. And then left and right now is the S&P 500, but let's swap that for US gas index. US average gas price. I gotta hit enter. And let's see if this works. Yeah, okay. So my slope is 0.64, which means there's a 64% return on oil. We want to switch that actually. Let's switch. I'm going to switch the order here. So I want AUTMUSAG index average gas. So I'm going to swap that and then do crude light CL1 commodity generic first crude oil. So that's WTI. That's fine. West Texas or Brent is fine. WTI is Texas produced oil and Brent is European produced oil. It doesn't really matter one way or the other. So almost flat, almost as if there's no correlation there between the price per gallon of a barrel of oil versus the price of gasoline per gallon. But now you can see the distributions too. So when you see big numbers on the top right, that means they're both up a lot that month. And we see numbers on the bottom left, means they're both down a lot. If it's up on the top left, that means the price per gallon of gas is high while the price per barrel of oil is low. And if you see it on the bottom right, that means the price per gallon of gas is low while the price per barrel of oil is high. And you can see there's not very many dots that are far down to the right. And there are some outliers in the top right, top left, and then not so much on the bottom either. This shows you that there's not very many times where the price of gas has gone down because there's none on the lower end. And then the distribution left and right is somewhat even. And you can see in this distribution on the bottom here where it's got this like kind of light curve with all these bars, that tells us like the overall distribution of returns here. And so you can see on the side, same idea. So we're we're above zero. We're above the zero line on the peak here. This is our normal curve, normal distribution curve. It's pointy. It's extra pointy. It's not very flat. So that tells us that it's leptokurtic. That just means that the distribution of returns is kind of more likely to be around a certain area. And you can see these really tall bars. So we're more likely to have just a slight growth in any given month in gas prices. Whereas this one, we have most of ours a little bit above zero as well. So we're kind of trending around, this is 5% growth. And so this would be around like a 2% growth. So we're trending around a monthly 2% growth in oil prices per barrel of oil. They could. I mean, this says right here the correlation between gas prices per gallon and barrels of oil per barrel is 0.06. So that would be the beta. A stock's beta is a comparison between the stock and the market. How much risky is the stock compared to the market? This is how much risky, quote unquote, is the price of gas compared to a barrel of oil. Now, there's a difference there because gas is priced in gallons and oil is priced in barrels, and a barrel is 55 gallons. So there's a little bit, I mean, but it's still done as a percentage return. So we're not too worried about whether or not it's gallons versus barrels, but sure. Yeah, but if we go, so I think it was Justin that said we should look at Chevron, right? Yeah. So when we did look at Chevron, I'll go back to CVX and then do FA. Oh, I might have to put US equity. There you go. They knew what CVX. So if we look at their ratios over time, so we say, so this is annual, so 2012 to now, or 2021, because they haven't reported 2022 yet. And we want to see what's their gross margin as a percentage. Like, so 18, is this in dollars or is it percentages? In millions of dollars. Can we do this as a percent? I'll figure out some way to, oh, that's what these are. So growth, that's their, okay. They're, no. I want to see like gross margin percentage. Maybe I can have that on something else. Sorry. That's a spam call. Oh, no, it's not. It's a campus phone number. I don't know if it is. That's okay. I'm in a meeting until the next 5 minutes. Anyway, if we could maybe find like how their gross margin or any of their margins are changing over time, maybe we graph this and compare it to their sales. I don't know why it says 13, but I'm thinking margin should mean their percentage, but I don't think it's 13%. I don't know. I'll have to dig a little more into it. It says US dollars up here, so it should be dollars. Yeah, but we might want to just compare, what's the spread there? Are they selling more and making more? Are they just making, are they super profitable because there's more total sales? What's their profitability on it? That's just, anyway, that's probably all right. Yeah. Retail sales. They could. So let's double check the description on here. So this is an index for the gas station index, retail sales, resale of new and used goods. Blah, blah, blah. This might be like Slim Jim sales, not actual gasoline. I'm not really sure. Gas stations overall sales. Looks like it went up quite a bit though. So gas station sales as of March 22 spiked. So it could be that people are just buying more of it. Sure. But these are all things we could go look at later. All right, I'm gonna call that good because it's one. Anybody have anything else before I close this? Anything else they want to see? Yeah. I mean, that was my main goal. I mean, we didn't actually launch the lab until March, right? So we've only been here for like a month and a half. But yeah, so awesome. Good work, everybody. Is everybody available for the bear? Go to the bear. 12 Wednesday, yeah, we'll do that. I'll see if I'll call them and see if I can reserve like a table out back or something. But they might just say, well, I know they'll be open. I'm just oh, they won't be open. Noon on a Wednesday during finals week. One time for so when I took Finance 458 as a student, right before the final for that class, it was like a Thursday night, and I ran over to the bear to get food. It was Thursday night of finals week, so everybody was done with their finals, right? And so I go to the bear and it's packed. So I ordered fire fries and boneless wings and all that. And they took forever to bring it out. So by the time they brought out all the food, I had to go to my final. So I just took it all with me. So I had the fire fries with all the nacho cheese, and we were in a cramped classroom, and it was like everybody was stressed out. Banking, banking law class, and I'm like spilling nacho cheese on my Scantron and stuff. So it was just a good time. It smelled terrible because fire fries have like grilled jalapenos and grilled onions on it. Yeah, it's good times. I might bring. Oh, there's no final for that, but it's all online. So I'll eat fire fries in memory of that for all of you all when you take that class. Okay, cool. I'll call that good then. Let's stop sharing. Stop recording.